No longer are cryptos just a niche retail investor play. Bitcoin and other cryptos are attracting money from all corners of the globe.
The lack of incumbent participation does really interesting things to the market as well. In the sense, it's more dominated by retail than any market this size than we've ever witnessed. Human imagination has really run wild in this market, and so helping out our institutional clients has never been larger.
FRNT Financial Inc. is a client and sponsor of PinnacleDigest.com, whose parent company owns shares and warrants of FRNT Financial Inc. Please read the full disclosure at the end of this video.
The emergence of digital or cryptocurrencies has created a vortex of interest, liquidity, and demand few could have ever predicted. And as a result, many new businesses are forming with cryptos as their foundation. One Canadian-based company is looking at the space in a different way. Unlike traditional cryptos that may bet on the price of crypto continuing to rise, this company is focused on market inefficiencies, arbitrage opportunities as it relates to cryptocurrency. For all you crypto enthusiasts out there, you're going to enjoy this interview. In a few moments, I'll be joined with 𝘾𝙊𝙉𝙏, the CEO and co-founder of FRNT Financial. A key goal of FRNT's is to bridge the gap between the new world of web-based finance and cryptos with Bay Street and Wall Street. As chair of the Canadian Security Traders Association, Stéphane is well suited to lead FRNT in its ambitious endeavor. Without question, he is one of the brightest minds in the capital markets we've ever had the pleasure of interviewing. Stéphane began his capital markets career working in the equity products group on the trading floor at BMO Capital Markets in 2010 as a cash equity sales trader. He eventually ran BMO's hedge fund sales trading group, including coverage of equity options and equity swaps. He would ultimately be referred to as a hybrid trader. In 2018, Stéphane left BMO to start FRNT Financial. Stéphane, it's great to be with you. Let's talk FRNT Financial. I think it would be helpful if you just explain, how the company generates revenue in as simple terms as possible.
The company is, if I was going to give an example of something related to traditional finance, the company is very much in the model of a traditional institutional brokerage firm. So right now, and we think that there's a lot of room for evolution in our client businesses, but right now the vast majority of revenues generated from our client businesses are spread-based revenues or splits on some kind of an agreement that we would have with a partner. We expect this to evolve a lot. Even around a business like our OTC derivatives business, there's a wide range of different revenue strategies we can employ. With something like OTC derivatives, it's such an innovative and new product. Our primary focus right now is getting traders interested in trading with the platform, because we think once they get comfortable, it's a done deal.
Crypto firms, collectively have raised billions of dollars over the past few quarters. What does this say about the space and where it's going?
Human imagination has really run wild in this market, and people have decided, to put their money where their imagination is and invest in these projects. Some of these projects will not work out. The vast majority of them will not work out, and a lot of the ideas that are on the table right now will be thrown out and may never be revisited. But there are many very interesting nuggets that are coming to the fore, and really FRNT is trying to help institutions figure out what the real elements are and what the fake and ephemeral elements are. And so the use case for FRNT in helping out our institutional clients has never been larger.
You've spent the majority of your career in the capital markets on trading desks. And when you saw this movement happening, what made you cross over?
What really drew me as a capital markets practitioner to crypto was just the lack of incumbent participation. It's becoming an arbitrager's dream, where there's just, highly fragmented retail flow that is moving these markets in a variety of different directions, and the institutions are not there, as I described, to police these spreads as they do in financial markets.
As it stands and it relates to, FRNT's business model, do you consider yourselves to be a first mover in the space, at least, within Canada?
Every time I say that we're a world's first or something like that, I'm really talking about G7, G20, and in that context, I really do think we're an innovator. There are other firms that, such as a Galaxy Digital, that are dealing with institutions and are doing so quite successfully. But I'd argue that they look at the space very differently than us. First of all, they've chosen to compete in asset management, investment banking, and private equity, I would suggest. Those are spaces that we've generally tried to avoid, barring the asset management side, because we think those are the spaces where incumbents are more likely to participate. Goldman Sachs can compete on an investment banking deal in the crypto space if they're doing an equity raise. But as I mentioned, they're not able to compete in the same way on the trading side. So we're focusing on the spaces where incumbents have more difficulty. And in addition to that, like I said, Our focus is on market inefficiencies in the space. We do believe the space is going to continue to grow. We have plenty of products that allow clients to take advantage of the passive growth elements of this sector, but uniquely, I think, our look at the market inefficiencies and alpha, I'm going to say that word a lot, alpha, is really where we think our focus is and where the untapped opportunity is for institutions that would otherwise look at this space and say there's nothing for me here. It's these market inefficiencies which we're trying to create structured products around via OTC derivatives and offer to clients. And in that context, we're absolutely the innovator. There's no one else.
And Stefan, what does alpha mean to you? What does it mean for FRNT?
So alpha means extremely strong risk-adjusted returns. Ultimately, a return that would imply a higher risk than you're taking in the opportunity. In crypto, are very much based on retail investor expectations. So while we look at a basis trade in crypto, long spot, short a future, and say, wow, how could there be a 30% annualized return for this, relatively riskless trade? A retail investor says that only implies a 4% yield to the June 25th price, for example. And we're trying to create products which make it easier for these institutions to take the other side of those trades and what will eventually, flatten out the BTC futures curve to something that looks more like a commodity market curve.
Who would be a typical client for FRNT?
Our clients, for us to be compliant under our exemption, must meet the permitted client standards as defined by the OSC. So I'd encourage anyone who's looking to work with FRNT to investigate those standards and see if they meet them. Looking into a subsector of those clients, which are all basically institutional investors, there is some potential for extreme high net worth people to work with us, but it's not really our focus. I would say small to mid-sized hedge funds, so in the $50 to $500 million range, are really solid early clients for us. But what we're also finding is that crypto firms who are managing their own treasury appreciate that the opportunities we're presenting exist, but have had a lot of trouble accessing them themselves. So our early clients are a lot of OTC desks and others that meet these permitted client standards. We're saying to themselves, hey Steph, I see these opportunities out there. I want to take advantage of them, but I don't have the internal expertise, even being a crypto trader myself. So I would say those are the two early clients we're going after, but ultimately, anyone who meets our permitted client standards is a target and will ultimately be someone we're trying to get trading these products.
Can you outline the different pillars and the business lines that are currently generating revenue for FRNT?
So the first is on what we refer to as our deliverable businesses. So that is OTC trading and treasury management. Those are businesses where we partner with other market makers to essentially build a client base, offer them our client-facing infrastructure, and then they facilitate the trades. So FRNT is exclusively in a sales relationship in that role, and as a result, FRNT does not custody any crypto, which makes a lot of our activities, such as dealing with banks, etc., a lot easier. And so that business I would throw into the bucket where we're earning spread revenue on those trades when our partners are facilitating trades through our infrastructure, through our sales process. We're earning a split on those trades as a technology licensor in that context. Similar way that we do in our treasury management solution. So that's again a partnered business where we've partnered with market makers to lend crypto on the behalf of our clients. And again, we receive a cut of that business. Again, somewhat spread-based revenue is the way I'd bucket that. In addition to that, we've just launched our OTC derivatives business, which as you know, Alex, is very core to where we think we're taking this business going forward. Currently, that is also a spread-based model, so very similar to the way we currently collect revenue on the OTC trading side is how we collect revenue on the derivative side. We have a lot of plans for how we can expand that revenue model going forward.
How is FRNT going to capitalize as all these institutions start moving one after the other towards crypto and getting exposure to it? How is FRNT positioned to capitalize?
So right now, if you're one of these new firms that's launched a digital asset arm in an asset management business, your job has really been for the last 6 months to raise assets and to buy BTC or maybe some other cryptos that you have a mandate for. These people are still going to want to keep their jobs, Alex, when crypto doesn't go up every day, right? So when we get a period of flat markets, or we get down markets, God forbid, these clients are still going to need to justify having a digital asset group at a firm. And I think that we're the only people talking about what do you do in markets that aren't going up every day. And a lot of that is on the market inefficiency side and on protecting your downside. And these are all products that we have long pipelines on OTC derivatives to offer.
Lastly, Steph, what are the most important performance metrics that investors should pay attention to when it comes to FRNT Financial?
With this kind of market, with as much volatility as it is, we need to grow revenue. I would say that if the market continues to be this volatile and we don't grow revenue, you should say to me, Steph, what happened? I thought you were supposed to make money in volatile markets. So revenue growth is going to be very important to us. So I would look at growth in our OTC derivatives clients, our actual volume held on the platform, the amount of trades we're doing, our growth in product set, etc. And the final thing I'd look out for from FRNT is strategic partnership announcements. Those three things: revenue growth, OTC derivative metric growth, and then strategic partnerships.
As institutions and hedge funds look for exposure to cryptos, new business opportunities within this emerging space have formed rather quickly. FRNT Financial's leadership will lean on its depth of experience in the capital markets as it aims to capitalize on the growth of the crypto space. Like this video and subscribe to never miss another adventure.